The following is a presentation of TFNN. Live at TFNN, The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the October 27th magnificent Monday edition of the Money Masters Show. I'm your host, Steve Rhodes, and hope that everyone is off to a great start of their day. Let's make sure that you and I, that we do all that we can do to have a magical and magnificent Monday. Hey, you know what? We should always remember that our greatest success is not in never falling. It's in rising every time we fall. Hope you had a great weekend. I'd love to hear from you today, so give me a call at 877-927-6648. Internationally, you can reach out to us at 727-445-1044. Remember, if you've got a question, somebody else has that same question, so don't do it for yourself. Do it for all the other tigers and tigresses around the world. It is Magical Monday. This is Tiger Financials Network. I'm Steve Rhodes, and welcome to the show. Right now, Dow is off 59 points, trading out at 16,746. S&P down 11 points, trading 1953. Composite off 27 at 44.56. Russell down 13 points, trading 1104. DAX off 130 points. FTSE down 46. Gold is back $1.20. Silver's up 3 pennies. Platinum's up $3. Light sweet crude down $1.24 out here. If we take a look at things that are moving and grooving in the marketplace, hey, how about this? Alibaba, BABA is the ticker symbol. She's the leader dollar-wise to the upside, up a couple of bucks, trading out at 97.80. We have not looked at Alibaba on this show other than the IPO date out there when everybody is saying or suggesting that Alibaba rung the bell at the top. And my opinion on that is that if you go back and you take a look at the most largest successful IPOs as they were coming due, you're only going to find a couple of them that really took place at the top. So the reality is pretty good odds, like really good odds, like extremely good odds, that was just a coincidence. There are no coincidences, but Alibaba did not ring the bell at the top. The market made a major bottom on October the 15th, October the 16th out there. All we are seeing after a huge move topside is we are now seeing a bit of a retracement. A retracement is one that, in my opinion, you want to be taking a look at buying. In the case of Alibaba, it's already back up into that September 19th high. 99.70 is the number. So far, intra-session, you've gotten up to 97.98. So it may have rung the bell on September 19th. And I can't tell you where Alibaba wants to trade. There's just not enough data out here. It's just the first time that it showed up on my screen, so I thought we would go take a look at it. Now you've got Doug, the ultra-short, for the XLE for the energy sector. That's up 5% this morning, up $2.60 out there. Lead the charge share-wise, individual stock-wise, really what I should say. You've got McKesson Corp up about 0.6%, up $1.24. Bard CR Inc. up $1.41. You got AmerisourceBergen. It's AmerisourceBergen. It's not McKesson. McKesson supplies all the major retails. It's AmerisourceBergen that supplies all those good neighbor pharmacies out there. That's up 1.5%, up $1.19. Let's go check in on AmerisourceBergen and see what it is doing. So you got all these distributors to all these drugstores that are doing well. In the case of AmerisourceBergen, had a huge sign of strength out here, consolidated, built a little bit of a base. That was between the time period of July 24th all the way to the low, in this case here, October 16th as well. In October 16th, all this did was came back into the breakout area. So it broke out with 4.5 million shares, roughly. That was on July 24th. The top or the bottom of the breakout, let's call it the top of the July 23rd session, was 74.28. Never got down and tested that level. Got down to 74.32, 4 pennies away from there, and it's taken off topside out here. This has a, let's pull this back a little bit further. Let me actually put ABC, AmerisourceBergen, on a weekly time frame chart out here. Now that swing point's going to be, it's got the confirmed A to B equals CD to the upside that says now wants to move up to the 1 to 1.272 level, which will be $82.49. Right now you're trading at 79.47. That is on AmerisourceBergen, ticker symbol ABC. Let me just, as long as I'm here, let me just edit this chart. Let me go ahead and change that status line, make it a little bit easier for you folks to be able to read if you're watching us on Tiger TV. And I know we've got a surprise coming for you in the not-too-distant future out here. To the downside, we've got Sarepta Therapeutics, Emerge Energy Service. I want to take a look at this. Thing has been just hit and hammered hard, down 8% today, down $7.59, trading out at... Emerge, trading out at $7.52. My recollection is this is a pretty good dividend-paying stock out here. So let's go see what it's doing on a daily basis. Now, what that means is that if we can find a buy point on this equity, might be worth checking into. So okay, so it's just pulling back here this morning. What has it done? Let's take a look at the A to B equals CD to the downside. See what that looked like here. Your A point was back at the highs in September. Your B point, September 23rd low. Your C point was this little retracement up here in September 30. So it makes a 1 to 1.272. A to B equals CD. Has a nice little reversal signal. Pulling back. Does this have any kind of sign of strength at all off of the bottom? It really doesn't. Where's some decent support on this equity? As I look closer and closer and closer, you can't find any. Really can't find any. I think the best play on this would be if this thing pulls back into that swing point from October 15th, which you got 1.3 million shares. If it can test that with lighter volume, then maybe you could take a look at pulling the trigger. EMES might be worth noting. It's come off of those highs from $145. You're trading at $87 right now. You've got. Let's go take a look at the ETF structures out here and see what we have going on today. Let's start off with the IWM, the one that has been hit the hardest out here. The IWM is going to resume strength here. It's going to be the leader on the way up going into the end of the year out here. And we do have a major, Santa Claus arrived early, no question. Put in that bottom on October the 16th out here. It's been one heck of a huge move up off of the lows, large move up. Now, the IWM not as strong as maybe the rest of them, but it's kind of like the race here. Like the race of Secretariat. And eventually, the IWM is going to come from behind and is going to lead things up. It's going to be the IWM and the Qs. Now, the Qs have already jumped into formation out here to take that lead out here as they've gotten very close to. They've made the 0.786 retracement. At least the NQ has. We'll go take a look at the Qs and see what kind of retracement they have. So they've already signaled to us they're going to their highs, but they're going beyond their highs out here. And I fully expect we'll see the IWM to fall into formation here and take the lead. Now, the IWM today's done 9.6 million from a volume standpoint on a bit of a retracement. The trading session from a couple days ago, October 23rd, 61 million shares out there. And, the move has been so strong. I just don't know what kind of retracement. I wish I did. I just don't know what kind of retracement we're going to get here in the market. I've been expecting a retracement between today and Wednesday. And I don't know if it's going to last till Wednesday. I don't know that. It's already playing out the way that some other tools that I use indicate that it should. But once that's over, it should be up, 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 and further up and away. Now, that doesn't mean it's going to be a straight shot. It's never a straight shot out there. If we do take a look at the retracement from the low out here to the high, that is the high that came in on October 23rd. Your dead cat bounce inside the IWM is 108.51 out there. And, I have conviction in my voice, in my throat, in my heart with regard to what the market is going to do out here. So, what we want to do is you want to find some areas to buy this retracement. I'd have to say 108.51 and the IWM maybe becomes that spot to look at. Ideally would be a pullback, a nice little scary pullback into the 0.618 level, which is 106.61. Quite frankly, testing the high of that October 15th candle session, which is 107, even Steven out there, that would be a beautiful thing. I don't know if we're going to get that kind of a correction. We'll see. Let's go take a look at the XLK. Not the XLK. What am I talking about? Let's go take a look at the QQQ ETF out here. Now, if we take a look at the Qs coming off that September 19th high, That was out at a price point of 100.56, down to the low that was put in here on October 15th. You can see the Qs are trading right at the 0.786 retracement level. They closed above it on Friday. Volume on Friday, so-so, 43 million shares a day before, 48 million shares. So running out of a bit of energy. It doesn't really bother me that the energy on the way up from a volume standpoint has been a little bit light. Remember, volume only represents one portion of the stock pyramid, the Stevie pyramid that is out there. There are other factors that absolutely impact the direction and movement of a stock. In the case of the Qs, they're headed to that September 19th high. Here's the beauty. That swing point only has 46 million. Now, at swing point's a whole different scenario out there. And so 46 million shares out there, and your might take on the Qs on September 19th at 46 million. It should have no problem taking that out and then moving much higher. How high, do you say? Well, the Qs are in the process of forming one heck of a large A to B equals CD to the upside. In fact, if you are interested in just understanding the A to B equals CD pattern, if you go to the homepage of TFNN.com, you're going to see right underneath breaking news says free workshop with Steve Rhodes. I'm doing a workshop for eSignal subscribers. I'm doing that on Wednesday. We've made it so that you don't have to be an eSignal subscriber. You just need to be a tiger or tigress out there. And if you go to the homepage of TFNN.com, underneath breaking news says free workshop with Steve Rhodes. There's a link there. It'll take you to the eSignal sign-up page. You'll be able to catch that workshop on Wednesday at 4:30 Eastern Standard Time. If we take a look at this move here off of that C leg, this says that the Qs, they're headed to 107.52. They're trading at 98.51 as we speak right now. I can't even tell you whether 107.52 is going to be the resting place for the Qs as we move in to the end of the year. But this is the market. The bottom that's been put in here is actually today. Depends on what the market does here today. So we got a lot of time left in the trading session. There's something I included, a lot of work that I did for my newsletter subscribers here this morning. Regardless of whether that comes off or not, this is one of the strongest moves that we have seen inside of the marketplace in quite some time. So that is a substantial, major, significant bottom that was put in back on October 15th and October 16th. And the Qs and the Russell 2000 will, or the Q is certainly going to lead the way. The Russell 2000 should get into formation, and it should be a race neck in neck out there. Let's go take a look at the SPY out here. The SPY is trading down 68 cents right now, trading out at 195.75. If we take a look at what the SPYs have done from high to low, from September 19th down to low on October 16th, they're above the 0.618 retracement. And their next level is really what it wants to hit is the 0.786 area. Again, you've got a Gartley buy pattern inside of the SPY, just like you've got inside the S&P. And the S&P is really what you're focused on because you got that hammer candle out there. Do we have a hammer candle in the SPY? I don't think so. Let's see. No hammer candle inside of the SPY out there. But we do in the S&P 500. And we got a hammer on the daily, on the weekly. It doesn't get better than that when you form a Gartley buy pattern. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Think or Swim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 26. S&P is down 6 points out here. The ever-ready market that just won't quit. We were taking a look at the SPYs. So the only thing we have not taken a look at is the diamonds. Let's go finish this off. Take a look at the Dow diamonds. Down a quarter as we speak here this morning. No big deal. Now, if we take a look at the diamonds, what's interesting as I take a look at the Dow chart out here is the Dow actually got hammered when we take a look at IBM, Coca-Cola, right? There may be a couple others out there that just simply took a hammering out there. Now, IBM is one of the top 5 weightings, maybe number 2, if I'm not mistaken. And the Dow is held up resiliently out here. The message that carries for you, or should carry for you, is that this market, the movement in this market, has been strong with not just the generals leading the way, with not just the heavily weighted stocks out here. This market has been moving higher with wide market breadth participation. That is not the sign of a bear market out there. So everything has gotten into formation and is moving along, and that is another indication of a major market bottom that was formed back here on October the 16th. If we take a look at the Dow Diamonds right now, they're trading right around the 0.618 retracement level at the 167.57-ish area. You get above that, certainly you get above 168.68. That happens to be the daily market profile inside of the Dow Diamonds. That would be very bullish. 170.10 is the next target area for the Dow out here. that's where she wants to head to before it eventually gets back to that September 19th swing point, where then that will set up. That's the key level. The key level in all of these are going to be the September 19th swing points, because when those are taken out with volume, they're going to confirm just absolute huge A to B equals C to up patterns inside of the marketplace out here, the kind that is going to last through the end of the year out here. If we take a look at what's interesting, if I switch over and we take a look at, we've got, a few days. Today's the 27th, right? So it's the 27th. We've got a little bit of time left in the month, so we've got window dressing time, right? But if we take a look at the monthly chart, let's just put the monthly chart out here on the screen. It's the Rhodes Momentum Indicator signals out here. And so what we know, let's say, because how do you know where you're going to unless you know where you've come where you've come from? Where have I heard that, right? I'm not sure where I heard that. But if we do take a look at where we've come from inside of the S&P 500, first of all, what we know is that the S&P 500 broke out of a 16-year, 800-point consolidation range. Why is that important? Because whenever you break a consolidation, your move is going to be equal to or greater than that consolidation. That's what's called your measured move out here. You had 800 points to the top of the consolidation, which is that 1576. That gives you that 2350-ish level. You're right now at 1956. If we take a look at the monthly charts have got more meaning than a weekly. Weekly's more meaning than a daily with regard to the trend. You are still, even with that push down that took place here earlier in the month, you can see how the market just simply has shaken that off. I wouldn't worry so much about the rising price channels that I've got, the blue lines on my chart out here. But at this stage here, there's absolutely nothing bearish about the weekly chart as we take a look at candlestick formations inside of the S&P on a monthly basis out here. The weekly chart, okay, so you've got a little bit more of an intermediate term time frame. If we put that up on our chart here, the weekly time frame actually gave us a nice little buy signal. We pull this back here, and we're taking a look at Rhodes Momentum signals out here. Let me actually see if I can pull this and scrunch. Scrunch is a technical tool out here. If you watch this on Tiger TV, every now and then you see these little green boxes that show up. Those boxes are reflective of sellers that have control in the marketplace. And one of the ways that the Rhodes Momentum Indicator signals work is once you see a close above that, you've gotten the sign that, okay, the market has now resumed its bullish formation. Look, we had one back in May of 2012. We had another one November of 2012. Out here. Once price closed above that, it was off to the races. We had one in January 2014 on a weekly basis. They're not very prevalent out here. There was one that occurred back here in August of 2014. We just had another one. This one I think is more important. This is the one that took place October 17th. The reason why I say it's more important or most important is because you got that nice little hammer candle that took place with it. And that makes the trade pretty easy from an intermediate term time frame standpoint. If you see it close below that low inside the S&P, that is 1820.66 out there. Then it says that there's something else that's going on inside of the marketplace. Otherwise, last week confirmed a buy signal from an intermediate term standpoint with regard to your funds out there. So if you're managing your 401k funds and you've got boxes that you can check inside of the marketplace and you've been sitting on the sidelines because you've been concerned, I say go check that box that says put some of that inside of the S&P 500. You just got your intermediate term confirmation. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 42, S&P is down 8, and the one stock chart that had bothered me the most was the New York Stock Exchange, and that's the one that actually has confirmed the major bottom inside of the marketplace. So, what's interesting here, what concerned me the most about the New York Stock Exchange was the fact that price came back and fell below that 10,387.17 mark. Now, that happens to be the high from 2007. The October 2007 high. And the reason that it bothered me was this. Whenever you're in a consolidation pattern inside the marketplace, whatever it is you're trading, a price breaks above it, comes back and tests it. It's really your confirmation because of the testing process that, it does not want to be a part of that consolidation party any longer. And that's really what the New York Stock Exchange did. It broke through that level back in February of this year, tested it in March, tested it in April, and then it seemed like it was off to the races. Now, what it did do was it went ahead and completed the 1 to 1 A to B equals CD. That means coming off of the low back here in March of 2009, that was your A point. Your B point was back in May of 2011. Makes a retracement, about a 50% retracement down to the lows in October of 2011. 1 to 1 A to B equals CD. Said it was going to move up to the 10,951 level. It did that. It got up to an actual high here last month of 11,108. Pulled back. Now, it pulled back. Now, the month's not over. All right, so the month is not over. We still have 3 trading days left in the year. Inside of this month here, the month of October. And 10,387.17 is the mark here. 10,506 as we speak right now. So long as it closes above that, all we've seen is another testing of that important consolidation level out there. So New York Stock Exchange, as you know, in helping us to identify that significant bottom inside the marketplace, we were just simply watching its price oscillator out here. If we switch over and we take a look at that price oscillator, as soon as we can locate the tab on our chart here, it was making that wonderful pattern, which as we had taken a look at for 15 years prior, once that price oscillator got below the zero line and then you started to see higher lows out there where the market that was moving lower, it was telling us that price was way overstretched and we were going to see the rubber band snap. And the rubber band snapped much further in a shorter period of time than I even imagined that it would out there. And now what we saw here as of Friday, we saw that price oscillator actually make a higher high, with price making a higher high. Markets in the New York Stock Exchange don't end like that. Markets don't end like that. So the retracement that's going on here, it's nothing more than just, taking its foot off of the gas pedal. I mean, you got to admit, this has been one of the strongest moves off of the bottoms out here in a long time. A stronger move than back in March of 2009, when obviously that significant low was made inside the marketplace. So if I take a look at the NASDAQ as well, let me see, where is the NASDAQ composite on the monthly chart? Let's take a look at that here. There's another area for us to be watching inside of that. That's the March 2000 swing point. So the NASDAQ has closed inside the March 2000 swing point for the last several months out here. And that's important because just simple basic swing point analysis, volume or not, right? Volume or not, when you close inside a swing point, it increases the chance that you're going to go test, in this case here, it's a swing point high, the top of that swing point. Inside of the NASDAQ composite, that's going to take you into the 5132 level. Now, inside of the NASDAQ, it's completed its measured move out here. But the retracement that it had from the lows in March of 2009 up to the high in May of 2010, down to or 2011, I should say, down to the low in 2011, only a 30.382 retracement. A very shallow retracement. What is the NASDAQ composite doing now? It's on its way to the 1 to 1.618. A to B equals C. D to the upside, that's 49.23. You're trading inside that monthly swing point. That monthly swing point high is going to be tested out there. And that's what the message from a monthly standpoint for the composite is communicating to us. And then from a monthly standpoint, if we take a look at the Russell 2000, the Russell 2000 came back and it tested a trend line that's the weekly. You wanted to take a look at the monthly. Actually, it was me that wanted to take a look at the monthly, but I'm assuming you did as well. If we take a look at the monthly and we take a look at this little trend line from back here in 2000 all the way up to 2007, price just simply came back and tested that trend line again. Now, we know that the Russell 2000 has been trading in a sideways consolidation box. It is about a 135-point move. If, in fact, we see a close above the month here, let me get my cursor out, the month of, July, the July high out here, that is at a price point of 12.13. You take 12.13, you add 135 points, you get to 13.50. The measured move consolidation pattern inside of the Russell 2000 is 13.50. I suspect that is where, once you get to the top of the consolidation box, then we'll just see if it has enough oomph, enough energy to break out of that box and then resume its way up to 13.50. That is something that is most certainly doable between now and New Year's Eve out there. And I'm not saying that the market ends on New Year's Eve out here, but we're going into the favorable seasonal cycle. We're in a second-year election cycle. That, folks, as a positive influence on the marketplace. The market just made Gartley buy patterns. It's the third one since like 2011 or something like that. You don't see Gartley buy patterns happen too often out there. We get all kinds of bullish reversals. We see all kinds of rising price oscillators out there that markets don't end on those. So the news that we've got the Fed, right, that's going, so the so-called potential ending of QE out there, which, you go back and you take a look at the stock charts, there's no question that when prior to QEs, have ended, we've seen the markets pull back. The question is, because of all the news that was already out there, is that really part of what we saw? Is what we saw, the selling out there, just a liquidation event? And so, therefore, the volume that's associated with it is not as relevant as maybe just a normal event. I don't know the answer to that question out there. Is the market going to fall apart come Wednesday? Look, I would say this. It becomes pretty easy to just simply look at it from a technical perspective. The lines have been drawn in the sand. If those October lows get taken out, then something else is going on. And I was absolutely incorrect about a major market bottom. But until that time frame, every single thing that I take a look at out here says major market bottom that has formed out here. The Santa Claus rally has begun. Now, you'd like to get some help from your friends out there, and that friend being the VIX index. And at this stage here, the VIX index is the one element here that has not really participated out here. It's trading at 1727. The 50-day exponential moving average is 1631. We've seen the VIX trade at the 50-day exponential moving average line basically for the last 4 trading sessions out here. Once you see price get below that 50-day exponential moving average, then you start to have that liquidity that comes back into the marketplace out here. I suspect that's what we're going to see. We're going to see the markets perhaps quiet down out here. No, I'm saying it's quieting down today or tomorrow, but we want to watch that. You want to see that get into formation as well. If we take a look at currencies, let's go see what's going on in the currency pairs out there. Let's go see what's going on with the king and the queen. If we take a look at the euro is off of the bottom, big time out here. So the euro is you're going to see the U.S. dollar index. I don't know who else is predicting this, so it might as well be Stevie, because I was the one out here saying that we significant major bottom out here, right? Well, I'm saying the same thing inside of the euro, where everybody is saying the euro is going to go to par. I'm saying the euro's made a significant bottom. I'm suggesting that you're going to see the U.S. dollar index fall, just as it rose up there. Now, inside of the euro, it's already made the first A to B equals CD to the upside. So we've already seen the change in trend that way. The second A to B equals C to the upside is underway. The A point's going to be the low out here. Come on, grab that for me, would you? There you go. The low is going to be the October 3rd low. That's going to be your A point. Your B point's going to be the session from October 15th. And your C point was this retracement down into October 23rd. The euro is headed to the 1.30 even level. Maybe it's headed to 1.3108. There is this little trend line that we put in here. That's the trend line coming off of the highs out here on May the 8th. The confirmation that a significant bottom has been put in, that we're seeing a change of trend, is going to be what happens at that trend line. So, we'll stay tuned for that. We'll watch that. I'm just going to extend the trend line out here. But the euro has very likely, and this is going to, and I can't even mentally wrap my head around how it's going to happen. I just can't. I just know that it is. Of course, I know that it is, not because of instinct, just simply because of all the analysis that I've done with regard to what the big money is positioning themselves to do out there. So how it's going to happen, I don't know. And it can't do it without the queen participating. No king can ever do anything without a queen, and that is the same inside of the U.S. dollar index out here. I see the Dow has just turned positive out here. Amazing. The pullbacks are just brief pullbacks inside of the market out here. Just brief pullbacks. So if we take a look at the Great British Pound out here, now this is delayed by about 10 minutes, I think, out here, yeah, as I take a look at these currency pairs. But let's just pull the pound back out here. Looks like the pound maybe, let me get rid of this. Let's draw a trend line inside the pound, just as we have the euro out here. So as I take a look at that trend line inside of the pound, that's coming out here from the July 15th high. Oh, nice. We got a little green line. So you can see right now the pound is also trying to garner some strength against the U.S. dollar out here. It has not, but that green line, that's the green line in the sand. Hey, let's go out to Thailand, to our man Mike, who's spending his evening with us here at TFNN. Mike, how you doing today?
Which Mike?
You, Mr. Mike.
From Thailand?
Yes, of course.
Okay, that was so fast. I never got connected so fast, so I got caught by surprise. Sorry about that, Steve.
No problem. How was your weekend?
It wasn't so good because I had kind of a lousy week last week playing the short side, so it was kind of, that kind of thing. You know how that goes.
Got it. So,
yeah.
I hear you.
Anyway, first of all, I want to compliment your caller, John. He called in before. And he talked about the what's going on in Brazil with their stock. I mean, they were down almost 10% at one point, the futures today. And anyway, I was looking at the same thing because I've been looking at that all last week.
And you're thinking of playing that one through Petrobras?
No, I'm not going to play it. I'm going to stay away from it because it's much too oversold. But here's the numbers I came up with in case, just to throw this John's way. And I want your feedback on this. I think that could go down to 33.35. That EWZ. Okay,
yep.
If it lines up with the bottoms. Now, I got to point out something to you. I know I'm not being very specific there, so let me just tell you. The bottoms of June of 2013, the bottom of February 2014, and what it is now, we could reverse. And if those bottoms all line up, we're going down to about 33.35 is the number I come up with. Now, here's something I got to tell you, Steve. If we close below $80 a barrel today in oil, that is going to send that index down. That index is going to stay down. I don't see it recovering because they got a lot of oil sunk into that index. They got a lot of oil sunk into Brazil, and with oil falling, that's why that index. That's why that index basically took a crash over the past couple of months because of what oil has been doing. Are you with me so far?
Absolutely. Yep. I like your correlation.
Okay. Now today, the last I checked, we're down. We broke that $80 a barrel. We're going in. We're beyond. We're going back into. We're below the October 15th low. If we close below that, if we close about what we are about now, if we have a good convincing break below that, take a look at PBR right now, if you would please. And that thing is just getting slaughtered today. It's down 15%. Are you with me, Steve? Or?
Absolutely. So excellent analysis, and our man John from Philly, appreciates your input on EWZ. So as we back into this, and some things for you to consider as well, I'll share this chart with you. And this is taking a look at, this is the continuous contract on the upper portion of my chart here for light sweet crude. Right now trading at around the 79, 78 area, I think. Right around there. What I can tell you is that what the big money is doing out here, the big money, the commercial traders, as I take a look at the CFTC information, is they are back to the same less net short positions when light sweet crude has formed significant bottoms. I can't tell you, Mike, that it's going to take place today, but I can tell you that light sweet crude is getting ready to make a significant bottom. Can you stay with us through this break?
Yes, absolutely. Thanks.
Okay, we'll go back out to Mike in Thailand as soon as we get right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open, even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. We're going to go back out to Thailand to finish off the show with our man Mike. We were taking a look at a number of different things. First, the EWZ ETF out there. We're taking a look at Petrobras. PBR is the ticker symbol there. We talked, Mike mentioned light sweet crude as well. And so when we finished off that last segment, Mike, what I was suggesting is if you take a look at the commitment of traders data out here, the big money, they actually up their less net short. They're always net short. So you've got to take a look at their, and that's as a percentage of open interest. So you have to take a look at their positions, and they're back at the same levels when other significant bottoms have been put in place. Unfortunately, it can't be used as a timing tool. What we have to use for timing tools, in my opinion, are signals out there, patterns. Whether those be A to B equals CD, patterns out there, maybe they're just simply candlesticks. In this case here, if I go with the candlestick patterns inside of light sweet crude, we had that nice key reversal session that took place here on October 16th. So long as that low hold, 79.10. Price is just coming back, and it's testing that area. If that low fails, then yeah, light sweet crude is going down. But we're going to see a significant rally in light sweet crude. I just wish we could use the CFTC, the Commitment Traders data, for a timing tool, but we can't. But here's the interesting thing. When we take a look at all commodities that have been just hammered, and all those being, in essence, priced in dollars, commercials are just simply loading up here. And what I mean they're loading up is, if you take a look at the strength inside the U.S. dollar index, what they did last week is they upped their net short position. They upped their net short position, so they're expecting a big, huge fall in the U.S. dollar index. How it's going to happen, I sort of covered that when we took a look at the euro. I don't know. I just know that that's what they are ganging up and somehow are going to engineer and make happen. If we go back to, I'm in complete agreement with you with regard to the EWZ, simply because it's trading into that swing point from November 1st with volume. And so long as it stays below 41.32, and you're at 38.74, more likely than not, odds favor a test of the low, which could be 25.39. That's even lower than your, I think, was it $33 that you were mentioning?
Let me see here. I came up with a ballpark figure of 33.35.
Yeah.
If we connect all the bottoms, that would be the third lower low. That's 33.35. You see.
Yeah, and at 32.99, you've got a 1 to 1.272 A to B equals CD to the downside. Now, specifically on the EWZ, if I put this up on if I put the EWZ up on my screen out here, what I will tell you is that it's at its sixth trough countdown, potentially sixth countdown. That's off of the high back here in the EWZ from September the 4th out there. It could have a different count to the downside. So it's either in number 6 or which would be F, or it's in C. So it's somewhere down there. So a little bounce maybe tomorrow, and then one more push down the next day to set up that potential G. That would be a nice trade there, because your stop is placed right underneath the low of that session. I don't know that it happens tomorrow or the next day, but I'm just kind of giving you something else to watch and take a look at out there inside the EWZ. So in the case of Petrobras, I don't know. That has just really been hammered. I think in the case of Petrobras, I would need more analysis, but it's down below its 2008 swing point low out there. That's not a good thing. That's been hammered. I would just need more time than the 8 seconds that we have left.
Yeah, all right. Well, yeah, that's about it then. Well, I really appreciate your time, Steve. I should email you and tell you more about what's on my mind. But thanks for taking my call, okay?
Hey, you bet. You bet as always. Have a great day, Mike. Folks, stay tuned. Our man Basil Chapman, he'll be up next. It is Marvelous Monday. That means we got Larry Pesavento, Daryl Martin, David White, Tom O'Brien show. Stay tuned, folks. I'll see you tomorrow morning.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.